Hey guys, welcome back. Drip Coach here with Drip and Farm for Property, where we don't trust, we verify, and operate with integrity and transparency. Today, doing a recap on Jack's weekly rant. So his Mailbag Monday episode, in this last one, he titled it Death Spiral, the Third Mandate, and Bitcoin as Macro. So essentially, it's more of the same. Like, I realized that all my content feels like me saying the same thing over and over and over again, but I learned this in marketing. And it's the best products, best marketers are the ones that literally repeat the same message. Like you have Coke, been doing this for like 60, 70 years, unlock happiness or whatever their slogan is. But it's like, they're still Coke, they still do the same thing. And there was another book on marketing that was like talking about how you'll get tired of your message before your audience will. So I know I reach a very, very small portion of people, but the message is super important about your survival in this Fiat Ponzi, regardless of what country you live in, because they're all playing the same game. And I feel like I cannot talk about that enough because not enough people have woken up. I forgot the stat, but it's like 95% of all Bitcoin has been mined, and 95% of people globally don't hold Bitcoin. So it's like, wake up or get left behind, and essentially just be on the same path that you've always been on as this shit show continues to get worse and worse. So anyway, Jack and his rant, and even the people I listen to, they're saying the same thing over and over again, trying to beat this drum. And I still learn stuff about this. So like, I really like Jack's approach. He dives into a bunch of different articles and tweets and videos that's happening in the macro, like in real time, so that you can see his thesis being validated against these global events. So in this first part of the clip, I got about 6 minutes from him. He's going to be talking about the debt, basically, and the only way out of this is through debasement, because we don't have any other levers to pull.
So let's take a look and deep dive a little bit into the high level. Zoom out and take a look at the bigger picture. So I pulled up this tweet last episode. I wanted to resurface it. So it reads, in the month of August, the US government collected $344 billion. Now that is from tariffs. So that is income the United States is generating, revenue the United States is generating, new revenue from this tariff program. Good for them. Just one problem. They spent $689 billion. So that is a $345 billion with a B, $billion deficit in 1 month. If you were to annualize that, take that $345 billion, you multiply it by 12, you're well over
3.5 trillion. He was going to say 3 trillion, but $3.5 trillion a year. Like, did we get here, man? Remember, Trump ran on this, bring back the middle class, and tariffs is going to make the U.S. rich again. And I drink that Kool-Aid. It made sense on paper, but I never looked at the math. I was like, we're got trade deficits, and we export more than we import, or we import more goods, export more dollars. Obviously balancing that sounds like a smart idea, but this is why I like listening to Jack and some of these other people, because they look behind the curtain. So you had the social media pomp and circumstance kind of beating the drum, and Elon Musk coming in with Doge to cut things and save us money. And he had all these tweets about millions here and billions there. I was like, oh shit, this is great. It's going in the right direction. I was drinking that Kool-Aid. It sounded like a really solid plan. Like if you're, running your own personal budget, obviously spend less than you earn. Makes perfect sense. And if you're spending too much, cut back on some expenses, less beers per day, less fancy dinners, whatever it is. But here's the reality. So we brought in 344 billion with tariffs, but we spent basically twice as much. So if you are spending twice as much as you earn each month, let's say your monthly salary is $5K and you spend $10K, you got to get the other $5K somewhere else. And that's coming from borrowing, a loan shark or some shit. And that's what the US is doing. They're borrowing. They're at a deficit of, like Jack said, over 3.5 trillion per year. That is nuts. And it's only going to get worse.
$3 trillion of deficit spending in a year. incredibly unsustainable. So why do I want to resurface this? Well, according to the Wall Street Journal, in September 2025, US individual income tax payments for fiscal year have increased by 12% year over year, meaning the US growth in the income that they take from all of us in taxes, the theft that they take from us via taxes. I just had a massive IRS payment. So the theft, the property theft that they are taking from us in the form of taxes grew 12% year over year. Another interesting stat is the US money supply has grown about 5% year over year. So the money supply is up 5%, tax receipts are up 12%. How the hell is the deficit higher?
Yeah, like let that sink in what he just said. So it's like they're taking more from you. They continue to take more and more from you. So that means they have more income coming in. And the money supply is up as well. But yet, the deficit continues to grow. So if you are not in assets that are growing higher than the amount of theft and debasement that your government, wherever you live, it's all the same fucking playbook. If you're not outpacing that, you are losing. I think Raoul puts it at like 11%. The money supply growth is 8% annualized, and then the inflation rate is 3%. So he puts that at 11. And if you look at probably real inflation in goods and services, it's probably closer to another 10. So your real inflation is probably somewhere around 15 to 20%, depending on what you buy and where you live in the United States. Like, let that sink in your head, 15 to 20%, and be modest and say it's only 10 to 12. But I'm sure some people are feeling, 15 to 20 in other areas of their life.
Guys, that would be the equivalent if you got a 12% raise, but your credit card bill went up anyway. If you're bringing in more income, if you are printing more money, the deficit is supposed to come down. Despite 12% year over year tax receipts, despite 5% year over year US money growth, despite tariffs, which brought in over $300 billion in a month. Our deficits grew. This chart is from Luke Gromen. Okay, this is the blue line is gross federal debt as percentage of GDP. Okay, you can see from the world wars until when we divorced from the gold standard, you can see this number go down. Now, if you look at the far right, Luke circles this little hitch, this little tiny dip, this little teeny tiny dip, because we want to get this down as a country. And look at his note here. It reads, note that this little drop in debt GDP from 2020 to 2022, so COVID, required 8% CPI, so record-breaking levels of inflation, 0% interest rates, and it aided by massive recovery from COVID and massive year-over-year SPX increase, so stock market up. So just to make that little tiny dent, that little tiny blip, that if that wasn't circled and I didn't highlight it to you guys wouldn't have even noticed. Just that little blip was record-breaking inflation, 0% interest rates, asset inflation through the roof, that then required us to have the fastest rate hike in the history of the United States.
And think about that again. So it's going from a GDP percentage of like 126 and right below 120. So we're going down, and that's why he brought this up. It's like going down, going in the right direction. But that literally had to break the economy. Like, you recovered, they locked everybody in their house. They gave massive stimulus checks. They hit record-breaking inflation, and they gave 0% Fed fund rate, meaning you could borrow money at 0%. So again, if you had assets during this, you made out like a bandit. You got free money with no interest. All you had to do was park that shit anywhere and you would have made out like a bandit because they gave you 0% on it. So you didn't have any interest on that loan that you borrowed from. So the rich got richer during this. But now, like you said, on the backside of that, you had the Fed cut rates from 0 all the way up to 4.5%. They just jacked the rates up. And CPI, I don't know what that is right now. It's not record breaking, but they also changed the basket of goods since then. So who knows? It probably is still record breaking. But like you said, you wouldn't pay any attention to this, but this is the goal. Like, to trend this downward is necessary for the economy to stabilize itself. And if you look here, you can see it's already trending back up.
that caused all of our banks to fail. And I'm supposed to sit here and believe that we're going to drive this blue line down without real rates negative, without financial repression? Are you crazy? And the point, again, I've shown this chart a million times, guys. The point is this. What do you cut? Listen, we as a government are spending more than we bring in. As the world reserve currency issuer, our major export is the dollar itself. So we have to export more dollars than we import dollars. Think of it that way. Our job as the world reserve currency issuer is to give the world more dollars than we take in from them. I could tell the US government how to solve their problem. It'd take 5 seconds. Don't be the world reserve currency. Now, if you want to be the world reserve currency, if you want to prolong this empire, if you want to keep the show going at the expense of your people, well, then we have to cut spending somewhere. Let's look at this visual. Where do you want to cut? Health and Human Services? Social Security? Defense spending? There is one place where you can cut and you can kick the can down the road. It is the Treasury. It is the interest expense on our debt.
And I'm going to pause there. You heard the rest of this because I got a caveat. Let me see if I can actually pull it up. Yeah, I got this article for you guys or some information. So reference what Jack was talking about. It's like, yeah, where do you want to cut? And the only thing that you can cut or run hot is the Treasury account. You're not going to cut it, but you allow the Fed to reduce the interest rate. Right now we're at 4.25%, I think, from 4 to 4.25%. Yeah, 4.5 to 4.25%. So Trump's plan, like he's been running on, is to run the economy hot. And his plan is to get rid of Powell and drop that percentage from 4 probably down to 1.5, like Mark said. And that's coming by May. So that in alone, that's the alpha, is that that's going to extend the cycle. I'll have some stuff from Raoul going later, but you get a massive drop like that, that's not going to be like, oh, we've hit the top. Like that's got to play out a little bit. And then of course, speculation and we'll hit the peak and euphoria drops off or whatever. But that takes things clear into Q2 at a minimum because the new Fed chair comes in May. So that's alpha 1. Alpha 2 is like you said, what do you want to cut? The last thing you mentioned in there was defense. Well, if you were not paying attention, there was an article, here we go, on the White House. President Trump announces the Golden Dome missile defense system. So this is basically meant to be some kind of basically a missile deterrent system, whatever you want to call it. Reminds me of the Avengers and Tony Stark. We need to put a shield or a dome over the world or whatever the case may be. And I believe Israel has something like this. But that's defense, right? Where does the money for this come from when you're already in debt? You're already spending more than you make. And now you want to do this. Where does that money come from? So here's the other option. It's like, hey, you got a great opportunity to invest in whoever is going to be heading up this project with Lockheed Martin. Like this sits at the top of their food chain, but obviously this will come in part with other tech companies. And I know he mentioned using artificial superintelligence. So like NVIDIA might fall into that. He did the Intel purchase. Maybe that's in there. So again, the writing is on the wall for where the money is going to go. It's going to be debased and stolen from you. But if you position yourself right, you can benefit from the upside because it's going to funnel into those things. So make no mistake, he is going to run the economy hot. He is going to get his Fed rate cuts come next year. And he is going to spend more money on making America great again, quote unquote, and being the number one in, I think he said, health, military, and like finance, crypto, all that stuff ties together. So, and he's got the ego and the bravado to push that forward. Whether or not it sustains or, falls to the wayside after that, I don't know. But you got 3.5, 4 years of him giving you the playbook and telling you what to invest in. So I will keep an eye on this. But the TLDR, if you are not investing in specifically Bitcoin or gold, you are going to get screwed, and it's only getting faster. All right, that's all I got. Smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible. See ya.